Thomas, thanks for joining us. First up, though, you're not exactly a bull looking ahead, are you?
Well, not really. There's been a number of technical signals that have pointed to some problems coming through. Since April, we've been pretty negative, but more recently, since late June, there have been a few signals that have said that markets are heading lower. And more importantly, if you look at the S&P chart, you can see some of the points that of a head and shoulders type pattern emerging in U.S. equities, as well as some of the moving averages have converged on the downside. So there's what they call the dark crosses. So if you look at the S&P chart right now, you can see that there's a 5-wave move up, and there's some trend line resistance that has been broken, or trend line support that's been broken, and we have the major target around 50%, around 950, that we're looking at on the downside for the S&P.
950 is crucial here, but so if we breach that, it's going to be the support or resistance on the way up. I'm just saying from a purely layperson's view when it comes to technical analysis.
Well, 950 is a level that should not be broken if the market is in a healthy mode and going to recover and rally into 2011. If 950 gives way, which there's increasing signs that that's going to be the case, you can see a lot of the VIX, the safety into bonds, the VIX is rising. There's a lot of indicators that are pointing towards increased volatility and a decline. For example, some of the lead sectors of energy and material stocks have already started to break some significant supports.
Thomas, isn't it a case, though, that this prediction is also based on the trend being your friend right now?
Well, yes. We have been trending down since April, and I think what we look at is the way it declines and the momentum that is in the decline. And you can see that there are some high degree or impulsive type moves on the downside, and we've seen that reemerge after what we considered to be a corrective rally in June. But so far, yeah, the trend is your friend, and that tends to be down right now unless we see a major reversal back up at that 950 level on the S&P.
All right, let's shift it with that in mind as well, with the trend also being lower on the Australian market. What are you looking at here on this ASX 200?
Well, the problem with Australia is the commodity component. And again, since we are more in the camp of a double-dip recession, that we see commodities coming off, oil, energy, material stocks. In the ASX 200, we've broken down from lower support of that sort of expanding triangle pattern, and that really indicates the downside move from the break around 46.50 and then a rally recently into June, and now we're breaking back below those supports. So that's a pretty aggressive move led by material stocks and energy, even in the face that of the tax revision, the market wasn't able to rally. So there's some Australian dollar problems as well.
Yeah, so that continues for a while. And, what about the Australian dollar with regard to this? Where is that going? People saying, well, we're headed to, 90 cents, don't see much US cents, should I say, and not much momentum beyond that.
Well, really, I was looking for around 90 cents myself until this recent sell-off last week, and that sort of changed the chart structure. 85.50 is a key pivot resistance. If you can break through 85.5, you could get to 90 cents, but I think around that 90-cent area or the recent high that we will be turning down and going down towards 77 cents over the next 3 to 6 months.
Right, let's move it to Taiwan now. You wanted to look at Taiwan for a particular reason. Tell us why, Thomas.
Well, Taiwan is sort of the precursor for a lot of the other markets in Hong Kong, Taiwan, that China play. And we've been negative China, the Shanghai Composite, since 3000, a real turning point at 2100. But if you look at Taiwan, you can see also a good example of many of the Asian markets having that 50-day moving average cross below the 200-day moving average. And we can see a breakdown there that is going to or is facing support at 7,100. You break below 7.1, that's a pretty big move down to around 6,100 in Taiwan. But a lot of these markets are showing pressure to the downside because of the slowing economic problems in China.
Called a dead cross, isn't it, Thomas, that, when a 50 goes under the 200?
Yes. Yes, it is, and we've seen that across a lot of the Western markets as well as the Asian markets and emerging markets as well.
So we head down to what, 6,000 odd, 6,100 or thereabouts? Is that what you're suggesting? That's quite a move down, quite a call there.
Yeah. It's we've been short since 8,000, but we really are anticipating a break below 7.1. We need to see that break below 7.1 to get to 6,100.
Right, I'm going to go to probably what I think is your bravest call as well, is your macro bearish sell call when it comes to energy stocks and also crude oil itself. Target of $58 a barrel here. Now that's quite something. What time frame are you looking for that?
Oh, that's a good question, time frame. I would say the brunt of the major downside momentum should happen in this July, August, September period, and by third quarter we should be seeing some pretty interesting lows to have some better buy levels in. But right now, it does look like crude oil has not only broken down below at 82, the recent rally above 76 was vulnerable. That's a sell level for me, and now we're looking for a move down to around 58. Energy shares globally from the peak a few months ago should decline by some 50%. So that's another global barometer towards slower growth.
So overall, everything's pointing to a autumn rally, it would seem, while we head into the mire before then, very quickly.
Yeah, I think the real risk here is the head and shoulders patterns we can see in the Western markets, particularly S&P, the NASDAQ, the Dow Jones. Those tend to be very dangerous type signals. If we don't rally back above 1050 on the S&P and we continue to break lower, there is a good chance we break below 950, and then the market sentiment should really turn and capitulate.
Thanks a lot for that, Thomas. Thomas Schroeder there joining us from Chart Partners Group in Bangkok.